Good morning. It's Wednesday, November 27th, about 6 a.m. Central Time. Over at the precious metals are snapping back here, extending that two-day rally. You've got February gold up $28 at $26.75. March silver up 13 cents at $30.96. March copper up 3 at $4.15. January platinum up 7 at $9.36. Palladium a little bit softer, and the gold-silver ratio sitting right around 86-87 to 1. You got crude oil futures getting a little bit of a lift, and a lot of this is because of the fact the dollar index is finally starting to continue to break down here. We had the Bank of New Zealand last night cut interest rates about 50 basis points, shrugging off some of that weakness and a lot of the negativity coming in a lot of foreign currencies. Looks like it appears to be completely baked in the cake here. So this is kind of the time to shine for a lot of these metals as you get into seasonal analysis here and you look at two historically strong months, specifically for the gold market, is going to be December and also January. Seasonally also, platinum futures tend to rally at the end of November, and it carries on through most of January, about 14 out of the last 15 years. So it's a couple things that we're paying attention to. Now, traders here that today on their agenda, the way it looks like is a lot of people are going to be off of work. They're not going to be paying attention to their screens. So you're going to get a lighter volume trading session, and all the trading activity is going to surround the initial claims data coming out, the core PCE. Remember, that's the Fed's preferred inflation gauge. We want to see that start to trickle down. However, we've seen a bump in the last couple releases, and we're starting to see that inflation data kind of poke up a bit. The only thing that could really affect this is a complete policy change going out into 2025, where the Fed actually begins to start raising rates again, but we don't see that on the cards at the moment here. The probability of them cutting rates at that December 18th meeting still sits at about 58-59%. And as long as we hold that type of level, we should see a more dovish stance here, specifically around the way traders are positioning. And I think that's where you get gold having this this higher low on the chart here, and we start to push our way up. So your trend reversal point really on that gold market, 27.23. So trading right around 26.75. If we can get that bump up here on some of the data, on some of the softer volume, and really work our way into this seasonal tendency where prices rise, I think that realistically gold futures could hit 2,800 to 2,850 by year end. Our upward price target going into Q1 of 2025 is closer to that $3,000 mark. Now you get into the silver market. Silver should be able to track higher with gold. We've got $31 as our first level of resistance, and what we're seeing is because of the fact that we've consolidated the last two sessions after that big fallout on Monday, you're gonna see the trend reversal point slide down a bit. So your first major resistance point gonna be the 50-day moving average at 31.94, but above that it's gonna be 32.44. So we need to start chewing our way back up, break through that 31 level, and then we could see this market really take off. I suspect a lot of traders are going to re-enter that market with a stop below that double bottom low, and then on the gold market, it'll be stops below yesterday's low. So a couple things to look at. Few things that I've been identifying here is a lot of traders came into Bitcoin after that two-day sell-off. I think that's a great opportunity here for futures to hit that $100,000 mark, because if you look at the probable ranges, because of the volatility, the average true range in Bitcoin is right around $4,000. You could see a move over a 1 to 2 day period where we break through that $100,000 level. Another thing we've been identifying here is on that platinum market, how platinum historically has rallied throughout the end of the year. We're going to start to target some of those January, February, and March call spreads, about $50 wide, looking to pay about $8 to $10 on those. So not a formal recommendation out to the public. If you got any questions, you want to talk to us about specific trade ideas and things like that, just giving you a couple examples of different setups here we'll be looking at in the markets. But again, it's going to be a little bit lighter trading volume. Some of these markets close a bit early. You got any questions, give us a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.